could be your sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In this video I'm going to be going over some updates for the total crypto market valuation, Bitcoin, Ethereum, Cardano, and then I'm going to go over SPX and gold. But to go ahead and get it started here, first off, for the valuation of the entire crypto market cap, here we see these vertical turquoise dotted lines. Each of these line up with the 618 retracement for these retracements here, and we can see that Bitcoin not Bitcoin, but the entire crypto market value was in a bear market. It came up, had a relief. It did not close above the 618, came back down leading into the March crash, and then it came up into August of 2020, hitting approximately 365 billion. This marked the first time, also after forming a very nice macro double bottom. This marked for the first time right here in August of 2020, where the entire crypto market and its valuation closed above the 618. Fast forward to currently, we've seen a macro falling wedge right here. We've had our breakout period, a veritable transition, a consolidation. We have now broken towards the upside. Have not crossed this 618 yet, which lies at 1.749 trillion. So around approximately 1.8 trillion. I'm willing to bet that whenever the total crypto market cap closes above approximately 1.8 trillion, that it will be something similar to this. And when I say that, I mean it could completely just blast straight above it. It could do something similar as it did prior, come up to it and just kind of basically oscillate around this line, approximately 1.8 trillion. Also good reason to believe that as well, because there's still a vector zone that needs to be recovered here. So again, we could push up, consolidate here for a little bit, and then push up and do something into the projected target range, with the lower bound being approximately 10.5 trillion and the upper bound being approximately 16.7 trillion. Now in past videos I have said that I think it's possible for Bitcoin to, or not Bitcoin, the entire crypto market cap to push up to as high as 18, 19, 20, 21 trillion at the absolute maximal. We also think about the amount of the tens of trillions on the table in terms of the ETFs for Bitcoin. That's also around, at this point, 27 to around maybe at highest 33, 35 trillion. So factoring that in, the institutional interest, I don't think it's too reasonable to start pushing definitely 25 trillion, but really start to pushing 20 to 21 trillion is kind of pushing it in my opinion. So as an update, I think, like I said, 10.5 to 16.7 trillion, I think is what is most likely sometime next year or in 2025. Although those of you familiar will know rather well that I think, according to my theory, my projections, that we'll see the Bitcoin, the broader cryptocurrency market, top out next year during the first half, roughly with respect to the Bitcoin halving. Outside of that, here to move on to Bitcoin, this monthly chart, I don't believe I included this in the last video, but I definitely posted something on Twitter about this. According to, you can see these color coordinated candles here, the blacks representing high selling pressure, high volume towards the downside selling pressure. These create vector zones that in bear markets are printed, and then heading into bull market, the bull market needs to reclaim that. Recently, the monthly chart, as you can see here, you see these black boxes. There's no longer a black box right here. So on the monthly chart, Bitcoin has now 100% reclaimed the entire vector control zone of the prior bear market. And what I said on Twitter is that once this happens, then this is perhaps not necessarily the final confirmation for a bull market, but I think I specifically said something along the lines of this: once Bitcoin reclaims this entire prior vector zone, that this coincides with all of the resistance pressure that Bitcoin needs to reclaim in order to finally then skyrocket towards higher highs. Now, if we go back to the prior bear market back here, the W of the phase 1 of cycle 3 we're in for Bitcoin, this bear market right here did not print any vector candles. We then had this intermediate rally into July 2019, came down to March crash, and then the March crash, the candle of March of 2020, was the only high selling vector candle was printed. And you can see once the first time, May of 2020, that Bitcoin on the monthly was starting to close above that, the bull market was 100% confirmed. This is also relatively synonymous with what these 618 lines are representing here on the total crypto market cap as well. Now, if we go back 2014, 15, 16, 17, up to 20,000, we can see this exemplified a lot more similar to recently, the most recent bear market, where we saw these 3 vector candles, the black ones printed towards the lows, and Bitcoin bottomed out, went sideways in its accumulation range, right here along the 50 EMA turquoise moving average, then began to slowly and gradually, had an impulse, slowly and gradually built up, relatively similar to what we've been doing recently. And then finally, during the month of June 2016, this white vector candle right here, high buying pressure, was the first candle that closed above the first black vector candle, basically at approximately $500. And due to that, I think that whenever Bitcoin closes above 42,000, specifically $42,854.95. So we'll just say approximately when Bitcoin closes above approximately $43,000 on this monthly chart, that there's a high likelihood that we'll see the first white high buying volume candle printed. Now it could be this month, December, there's still 23 days, 15 hours left, or it could be next month during to January. I'd say it's 50-50 at this point. Whether or not it closes above. And I personally, that's to be reasonable, I personally think that it's more likely that we will see Bitcoin close at or above 43,000 during this month. I think at this point, which I'll get to a little bit more specifically later, but I think Bitcoin can push as high as approximately 53 to 55,000 by the end of this month, possibly bleeding into like first week of January. But then lastly, I don't think I've gone over yet, this MACD down here we can see flipped bullish for the first time since it flipped bearish. Roughly a little bit in a few months, 4 months into the most recent bear market. And so basically end of October leading into the beginning of November as Bitcoin is breaking 30,000 for the 3rd time after setting 2 prior local tops. So back in April and July of this year, finally broke 30,000 for the 3rd time. Monthly MACD flipped bullish. Here for this weekly chart. So according to my phase cycle theory, this right here, this ABC or ABCD type lightning bolt looking pattern, this is the bull market of what in my theory is phase 1 of Bitcoin's cycles. There's 2 phases in a cycle. Phase 2 would be what Bitcoin looked like during the 14-15 bear market and the 16-17 bull market. And then from 20,000 to up to the projected high of 180,000 and 250,000 a highest would be phase 1. And then, like I said, so this highlighted bull market, this is synonymous with what was considered and is considered commonly to be the super cycle, which is what happened around 2012 and the 13 when Bitcoin hit $1,200. And it was also an ABCD or ABC lightning bolt type pattern in terms of the price harmonics back then as well. And as I've said many times, the reason why this one doesn't look like it exactly, still looks like it clearly as I drew out, but just taking longer to play out, decelerative growth, lengthening of cycles, etc. Most of you are familiar with, especially if you're familiar with what I talk about in my videos. But using that as a preface, here we can see this horizontal median that is characterized basically the entire this entire bull market of this phase one, but specifically with the distribution and accumulation ranges. The distribution being as Bitcoin is leading into its all-time highs, it set the double top, 64 to 69,000. Price was starting to, it was printing bearish divergences on the RSI, etc. It was the buying pressure was fizzling out. We got there's a purple vector candle right here printed for a bearish divergence candle. And then once Bitcoin was rejected at 48,000 in April of the last year, and then eventually lost 32.5 thousand. We then entered this accumulation range or period right here. So basically anything under 32.5 thousand was the golden, well, 32.5 thousand down to 15.4 thousand would have been the golden range to buy in. Obviously, buying more around, 19 right here, 19 to 15,000 would have been key opportunity. And then obviously, like, best case scenario is you just knew how to time the market perfectly and you bought 15.4 thousand in one fluid clean buy. Although that's hard to do, and that if you make that your aim, you can get pretty messed up in terms of making good investments and good trades. It goes along with the common saying is that time in the market is better than timing the market. The longer you've been in the market is typically due to the gaining of more knowledge, and just market wisdom is going to be better than trying to perfectly time the absolute highs and the absolute lows, because it's not particularly feasible to do that, at least every single time you're going to make a trade or investment. But anyways, so like I was saying, so we see the distribution here. I see the accumulation, and then what connects these, so, or what unites the distribution and the accumulation phase is the bear market. But on the flip side, almost paradoxically, what also connects or unites the accumulation or distribution phases is the bull market here as well. You can see it's just kind of flipped over, it's reversed on its head, where the first is the accumulation into bull market, and then what to be the distribution right here, then halfway into the bull market right here, or halfway into the bear market rather. We then kind of see something along these lines, and right here we see accumulation again, that being that specific projection being according to my phase cycle theory. You can see that we've closed many candles above it. We've basically, in the last video I said once Bitcoin starts to push above 40,000, then I think we could see a quick move up to 45 to 48,000. So far, it's wicked to as high as 44.6 thousand. So the lower bound, 45,000. This point has essentially been met for all intents and purposes. There again lies this vector zone up at 52 to 50, basically 53 to 59,000, which I think is the next rough range we'll hit until before Bitcoin pushes above 69,000. We can see this ascending green zone. Now the trend line that I first used was from the candle close of April 2021 to the candle close of November of 2021, the two candle closes that represented the highs of the bodies for Bitcoin. And then I just cloned it and took it to the highest wick back in April 2021. And that created this nice range that further firms and acts as a confluence for my specific bull market projection. You can clearly see that if it follows something similar to how I think is going to happen, we're going to see a pretty much straight move up to around 100 to 120,000, fizzle out in that range that I mentioned for a bit, lining up with this support or this green range, come up to the final high, wherever it ends up being, and then finally it'll come down and find support along that and jump up to somewhere around 180,000 if the all-time high ends up being around 210 to 250,000 or so. If Bitcoin goes to 250,000 rather than around 220 to 230,000, then 180,000 right here go push up towards around 200,000. But outside of that, so for all the indicators, we can see whenever this ASO indication many videos ago, going all the way back to the 2014-15 into 2017 bull market high. We've seen a 6 pivot point or 6 crossing pattern for this indicator, and the buy signal going all the way back to 2014, 2013 flashed, and basically very 30th October, basically the beginning of November, as Bitcoin is breaking this median horizontal support / resistance. We look here at the RSI, been updating this chart in general for quite some time. We see these orange resistances going all the way back again, 2014, 2015. We then see the breakout. We have this kind of bear to bull transition period on the RSI, and we can see that the RSI is broken. It's right on top of the lower bound of the bull market oversold range. Last time this happened, relative to the similarity in bull market we should be seeing coming up. Last time this happened was going back to November, December of 2020, leading in 64,000. We look here at the MACD. This MACD I've been updating for a while. This massive, I'm actually kind of curious how long this is. 1,036 day long. It's almost perfectly symmetrical triangle. I think I've been going over this, like I said, going back to maybe June, July of last year. We got the final bounce in yellow right here, and you can clearly see that it's still continuing to build up towards the upside. But moving on to this 4-day chart, we see the macro falling wedge I've been going over for quite some time here. We see these 4 various price projections according to this falling wedge. So like, for example, I took one from, I'm not saying these are the ones I exactly took, but I just took them spanning down the triangles. They get smaller and smaller to create a set of potential price targets. So far, the first 2 of the 4 we can see here has been met, going above at this point 43.2 thousand. The next one specifically lies at 51.4 thousand. Lastly, 79,000. Or generally, you can say that the next range for Bitcoin to enter will be around 51 to 79,000. And this fractal pattern, this bar pattern we see on here, I placed going all the way back to this white vector candle right here during beginning on December 3rd, and so far it's played out very similar. It's actually been a little bit more bullish than the fractal pattern itself, which again pushes us up next, like I've been saying, at highest like 53 to like 59, 60,000. And then when it comes to a higher time frame view of, let's say we get a retracement, whether it's this month or next month, I think in general either sometime more towards the end of this month, rather like starting maybe around the 20th, or sometime just generally within the entirety of next month, January of 2024. Within this time frame, I think Bitcoin will see some sort of retracement. So if it happens earlier rather than later, then I think worst case scenario, Bitcoin retraces, like I've been saying, down to 30,000. We can clearly deduce how important 30,000 is right here. It's the upper bound of this larger, it's actually the biggest vector control zone on this segment of the chart right now. There's also one right here around 38.1 to 39.7. Although none of these 3 vectors right here, these white vectors, are recovered whatsoever, which would be a reason why it could come down due to the 50% rule of thumb. But that doesn't necessarily always have to happen, the 50% rule of thumb, 50% of the prior vector candles being reclaimed. And that especially applies in a bull market for Bitcoin. Retracements or drawdowns, pullbacks are not 100% absolutely necessary in a bull market, but they're by all means definitely likely and possible, but they don't have to happen. Moving into here, the 6-hour chart to play upon, really kind of paint a picture. If we get a retracement here, like I've been going, and what I said in the last video, we see this ascending, this wavering upwards bullish constructive price action. Again, it's very similar to around the same time, same month span we've been in the last 3 months of 2020. We can see, like I said, come up to 44 on the 6-hour chart. It's as high as 44.5 thousand. There is, if I zoom in, we see this purple candle right here, seeing some type of bearish divergence candle printed. We can see here that on the RSI, it's nearing the 618, this turquoise retracement of the Fibonacci retracement, which is at the highest RSI high and the lowest RSI high, going back to whatever the latest the 6-hour chart goes back to. So when it comes to the vector candles, in terms of seeing some sort of a pullback, a potential pullback, so the first vector candle in this recent impulse that wasn't recovered goes all the way down to as low as 38.1 thousand. So starting from this first one, there's 1, 2, 3, 4, 5, 6, 7, 8 vector candles. So if we count back 4, 50% rule of thumb. So 1, 2, 3, 4. Only a drawdown of basically down to approximately 40,000, equating for some wicks down to maybe 38, 37,000. That is if a pullback is going to be seen lower than it's already gone. That's what's down to approximately 40,000 is what is necessary. It could go lower, but 40,000 is definitely all that it needs. That also, as price goes down, is going to coincide with, you can see this 50 EMA moving average, turquoise moving average in its band, encompassing around, like I said, let's see, around 41.5 down to around basically 40,000 on the dot. So definitely will not be surprised if we see that. And then, like I said, best worst case scenario, zooming out quite a bit here, we would see I would say if we draw down to 30,000, down to around this low, then it would be something rather quick, rather than being a drawn out pullback or retracement. If we take the measurement down to, let's see, right around 30,000, it's 32%. Been recently saying to equate for some wick lows down to 28.5. If it goes down to 30,000 in the first place, that pushes it to 36%. So we're looking at potentially 32 to 36% possible drawdown if things go that way. If I were to go back to the bull market, mainly the bull market of 2015, 16, and 17, heading into 20,000, there are multiple 30 to 40, at the most 30 to 40% retracements. Some of them are 20%. Really, rule of thumb, when Bitcoin's in a bull market, it only, going back and looking at its history, actually, one second. What is the March crash was 72%. So taking out the March crash and just really, like I said, looking at this bull market right here, the 20 to 40% is typically that would be considered a healthy pullback or retracement in a bull market. Again, like I said, excluding the March crash, which, that also lined up with the pandemic and everything. So that crash was also likely exacerbated due to the chaos that society in general was entering during that period of time. But outside of that, so moving on into Ethereum. Again, last video, for the first time, I mentioned this massive, I think it's at around 600 days at this point. 574 days to be exact, sending triangle. Again, like I mentioned, the breakout targets is a range 3.7, 5.2 thousand. It reaches a maximal. Obviously, it's going to put it above the all-time high. Now, when it comes to the all-time high projections, that I remember the last time I went over the all-time high projections, but within the last year, so generally I've been saying 20 to 40,000. Once Ethereum starts to push 40, 41, 42, 43,000, that's going to then, Ethereum will then start to eclipse the market valuation of Bitcoin. I don't think that's impossible. I don't think during this cycle it's I don't think it's more than likely to happen. I think there's some likelihood, but I don't think it's most likely. So I would say something more around 25 to 32,000 is more feasible here for Ethereum, and that range also correlates with the Bitcoin or the Ethereum to Bitcoin. The Ethereum Bitcoin chart also projects it specifically is 32 to 45,000, which again that is also roughly it's correlating this USD projection as well. Although I did go down a little bit lower, like I said, down around 25,000, just to be a little bit more conservative and reasonable, I suppose. So if, let's say Bitcoin sees a drawdown. If Ethereum starts to lose around 1,700, 1,600, then things could get pretty messy pretty quickly. Here for Cardano, we can see that similar to what I was pointing out with Bitcoin earlier, we see the distribution phase, we see, or rather actually it'd be more, well, let's draw it like that. We see the bear market, and then we see right here, we see the accumulation period. We can see orange box, Cardano, and this accumulation range is closed. Well, it hasn't closed yet, but currently it's the highest that it's been in this entire accumulation range. Getting the weekly candle close above 45 cents, especially 50 cents, because that's where this 50, the white estimated moving average, sits currently. It's also where the current wick sits. Cardano going above, closing above 45 to 50 cents. That'll be very good to see. When that happens, I think it's likely to see a quick spike up to the next vector zone around 72 to 85 cents. There's also a very small vector zone right here at about $1.30, and then an even smaller vector zone at around 262. So kind of generalize those, make them a little bit broader. There's clearly plenty of room to find consolidation resistance right here, and then clearly within the respect to this all-time high range, you could see some sort of short-term consolidation before things blast above the prior all-time high at $3. So when it comes to the all-time high for Cardano, the projections for this are going to line up around $20 to $36. So this hasn't changed from the last time I went over this. It's still $20 to $36 again. Generally sometime, and this goes for Ethereum as well, generally sometime next year or 2025. But again, specifically, according to my projections and my bias, sometime first half of next year, roughly around the Bitcoin halving, which is projected towards the second half of April. Some websites are saying first, like week or two, the first half of May as well. So somewhere second half April, first half of May. And let's say things do, like I said, for Ethereum, let's say Bitcoin starts going down, etc. If we see Cardano start to close above or close below on the weekly around 30 cents, then I think there's some room for worry and perhaps caution there. So moving in here to the SPX, really nothing much here to update on the SPX with respect to what I said in the last video. What I said in the last video is essentially the same thing. Quickly to sum it up once more, zooming out here, we're seeing clearly the price has been building up ever since around 2800 January 2018. The RSI has been in a downtrend ever since then. We've seen various bearish divergences until we got this final top right here, and we're seeing the price-based resistance right here. And what I find very interesting is on top of what I said in the last video is we came down, we see these two blue vector candles right here signifying a double bottom with, as you can see right here, bullish divergence. And then after that, we had this local top, and this local top. The RSI wasn't doing anything special, it was just continuing to go higher and higher. And then each of these, so one local low, two local low, and then we'll just say generally this rough area, third local low. We can see each of these was going down as the price is going up. So what we were seeing here was a triple hidden bullish divergence. And now we are getting a hidden bearish divergence after that triple hidden bullish divergence with respect to these two local tops right here. You can see that it's basically horizontal resistance right here, but these current candles, the previous one at the very least, did close higher than the weekly candle on the week of the 24th of July. So, and you can see the drastic difference. The RSI is a lot more negative towards the downside in its slope. So right here, at the very least, we're seeing some form of an exaggerated hidden bearish divergence after that triple hidden bullish divergence. And what I was saying in the last video was that there's a possibility that we see the price overextend in some fashion its resistance right here. And as the price is overextending, the RSI is going to reach its oversold territory. It's going to reach this resistance, like I said, that goes back to 2018. And then we'll see basically a fake out scenario. And I think the SPX is going to continue to come down and see a pretty significant downtrend over the next year or two, perhaps longer. Now the main update in terms of the fiat market, the traditional things here, is here for gold. So in the last video, which was at this point 5 days ago, so if you were to just take off this most recent candle right here, was the candle the week of the 27th of November. We had already closed above, again, this is very similar to the SPX analysis, closed above this recent, these two local highs, this resistance here. And we're seeing the RSI, very long term, 3-year downtrend on the RSI, whereas the price has basically been going sideways the entire time. And basically what we're seeing here for gold, again, like I said, is what I think could possibly also happen to the SPX. We're seeing the gold overextend here up so far to $2,144.97. And in the last video, I specifically said that it's possible, as I have these two price indicators right here, to push up to around 2,200, 2,300, if that. Now, I do want to say that I think it is possible that it could overextend at high as to 2,500, although I don't, as of right now, I don't think that's too likely. I'm still sticking to if it overextends any higher than it's gone, about 2,150 basically, then 2,200, no higher than 2,300. And again, like I said, as the price is overextending right here towards some sort of local fake out top, basically I think we'll see the RSI come up to its resistance, reaching in this descending, highly oversold territory, and then we'll see gold come down. Ultimately, I think likely going below 1,600 and entering a significant downtrend, like I said, akin to the SPX, the NASDAQ, the New York Stock Exchange, basically the entire fiat market, due to the decoupling, the institutional interest that Bitcoin and broader cryptocurrencies been seeing recently. Just to quickly sum it up, because I kind of I suppose I perhaps kind of reiterate the same things a little too much in a lot of my videos, but I believe that society in general is heading into a very, we're seeing a very important paradigm shift in society in many, many realms of life that's coinciding with, obviously, economics, blockchain technology, Bitcoin, what Ethereum can do, and what other cryptocurrency protocols and projects can do. Across, like I said, many different realms of life, rather. But then outside of that, one thing I don't think I went over in the last video is that we're also seeing something similar here for the MACD as well, where I think it's also possible that gold's MACD will come up to its resistance and then flip into bearish momentum once more. But that was all that I wanted to go over in this video. So again, as always, hopefully enjoyed. Once more, none of this is meant to be a financial advice by any means. Make your own decisions, do your own research, come to your own conclusions. All this was meant to be educational, and with the hopes that you guys watching this video can take away something, some insights, perhaps some of the indicators I use, or whatever else you may find valuable. But all of that being said, I hope you all have a blessed day.
Ooh, I'm regretting now, won't die. such a long time is what we've been through. You're on me like